Hello guys, Mike Mohebi here. Today is 12th of July. It's close to 6 a.m. in Melbourne, Australia, but it still is 11th of July in London and New York. It's close to 4 p.m. in New York and close to 8 p.m. In London. We want to analyze AUDUSD, Australian dollar, US dollar. And we wanna follow that 4-step technical analysis as we have done in previous videos. So the first step is we're gonna use that triple window analysis as Dr. Alexander Elder discussed in his book. Okay, if you don't know, just go and take a look at his book. We need the main time frame, which is daily for us, a higher time frame, weekly, and the lower time frame, H4. This is a triple window time frame analysis, as Dr. Elder says. So we go to weekly and we take a look at the market. As you can see, market is bouncing up and down, but every time that goes down, this low is higher. So the low was here back in 2016, January 2016. Again, this low is higher, this low is almost the same, and the next low is higher again. So this is the higher low. The higher low shows that the market is trying to move up. Every time we move down, it doesn't let the buyers and sellers agreement. The price is the agreement between buyers and sellers, right? They agree to close the price on a higher level than the previous low. So they think that this price should be higher. And that's the expectation of this currency pair at the moment, that the price from like 2 years ago, a year and a half, is moving higher and higher and higher. But there's a ceiling up here. If we put a resistance line here, as you can see, this ceiling, every time 1, 2, 3, 4, and this time close 5, has stopped the price from going higher. It's a kind of a spring, right? We push it higher, it cannot go higher. It comes down, but it doesn't go down all the way. Again, goes higher, it's stopped, and then come down, goes higher. It's getting more pushed together. This spring is just gathering power and power and power. At the end, there comes a time that the price cannot tolerate this pressure anymore. It just suddenly just break through these ceilings. Either this ceiling or this floor is gonna break. Okay, it cannot hold this price at this level for a long time. So this spring now is gathering more power and more power. So normally 3 times that the price touches up this ceiling, the next time it's gonna break. So that's a normal average, like 70%. So currently this price is getting close to this kind of a breakout, and we expect that in the near future we're gonna have a very drastic move in this currency pair. As you can see, this is a triangle. The base of the triangle is the start of the triangle is like 900 pips. At the moment, the triangle is about 340 pips. So it's like a 1/3. If this breaks up, our expectancy that the analysis of a triangle in technical analysis is that if the price breaks up the higher level, this is an upward triangle, okay? Because the up level is flat and down level is going higher and higher. So the expectation is that the price, after breaking that high level, gonna go almost the same as the base of the triangle. So 900 pips. We don't put the target in 900 pips. We normally put it I normally put it in steps, like one at 300 pips, the other one at 600, something like that. And you can add more positions as every time you get a new signal in this way upward. So you can kind of have that avalanche trading as we discussed before. So at the moment in the weekly chart, we have this triangle. we go to the monthly chart just to take a look. I don't use monthly chart normally. As you can see, from 2011, so like April, June, this currency pair started to move down. And when it moves down, it means that the Australian government is devaluing the currency, the Australian dollar, more than the American dollar is devaluing their currency. It happened that in 2011, this currency was 1.1 US dollar. So you had people, Australian people had more advantage to move out and spend their money outside of Australia. And that's what the government don't like, you know. They want to keep the money inside their country. That's why they're devaluing their currency. That's what US dollar, well, didn't do actually, because the euro was in turmoil, and they wanted to support the European countries. So they let the euro devalue, and the euro moved down. As you can see, this is the monthly chart in Euro USD, right? In 2011, almost the beginning of 2011, they let the euro move down, so to support the European countries. That's what the Australian government did as well. And at the moment, the US dollar is devaluing. It started to devalue. Donald Trump is going to support the American economy, and he said that that's enough. We supported the whole world for 5-6 years, and it's our time now. We're going to support the American producers, manufacturers, and we're going to devalue the US dollar. And all these currency pairs who are against US dollar, probably they're going to move higher. I'm not saying all of them. It depends on their rate of devaluing. If they devalue their currency more than US dollar, you're gonna see a very, very drastic moves. But it's a kind of a war, the currency war, as Jim Rickards talked about it in his book Currency Wars. Every country tries to devalue their currency, and at the end what happens is that all the currency is gonna go to zero. That's what the fiat currency is about. That's what they call it. Currency is current. It's just moving. The value is moving all the time. It's not based on anything. There is no money. There's no like a gold or silver backing up these currencies. They can devalue it every day. So that's why you shouldn't keep your value, your assets in dollars or in money. You should have a hard asset backing up, either real estate, gold, silver, something that you can hold on to, not the actual money in the bank. That's what all the rich people are doing. So this is what's happening at the moment. This is a triangle. It's very clear in monthly and weekly chart. We're gonna draw some other resistance and support lines. This is a monthly chart. It's very long term, but yeah, you can see clearly there is a resistance here, and a very stronger one down up there, and one up there. This is a zone actually, but yeah, the price tried to peek through and then it couldn't move back. So in the weekly chart, now we're getting close to breaking this level. Maybe it goes down if the Australian dollar continues is devaluing more than what the US dollar does, but that's not the general idea. Donald Trump is trying to support the Americans. So probably the other countries gonna stop devaluing their currency. So in the past 2 months, this has been the trend. It's a very tight channel. Sorry, I don't know what that was. Well, alright. It's getting very tight channel. As you can see, this is a channel that we are looking at. If we go to daily, you can actually move this channel something like that, or tighter over there. This channel, every time that it touched, the price touched down, it moved higher. You cannot, in an upward channel, you cannot trust the down moves. You have to wait for the up move. Okay, you have to follow the trend. So every time you get these big candles that covers, they call it engulfing candle. It covers the previous candle higher. So as you can see, the close of this candle is higher than the open of the previous candle. So it shows that the buyers are in power and they're gonna push the price high. This is one of the signs that the candlestick analysts follow to get a position. So every time the price moves higher and this candle forms, you see here, and again, well, we don't have anything yet here. This is a different type. But in these two positions, as you can see, you could get into this trend in these waves. One hit down here, this pin bar, second one here, third one here, and you would be up there. You would be in a very, very strong position, like a 600-700 pips, though the market just moved 300 pips. So at the moment, the price, you see, we have a little fluctuation in 3-4 days here, but suddenly today the price broke up and it's going higher. So it's a kind of an up move, the first signal that we need. Okay, so in the second level, we're gonna add some Fibonacci levels. The Fibonacci retracement, as we said, is the low, the last high and the last low over here. In this position, the Fibonacci level normally acts like it goes to 50 or 61.8 and then suddenly it drops. We don't know what's gonna happen, but we expect that we have some little resistances in these levels. Not big, because this is the daily chart, and if you move to the 4-hour chart, you can see that you have small resistances in these levels, and that's gonna continue, but the whole trend probably is gonna move up. We don't know yet, so the Fibonacci doesn't show that much daily. If we draw this Fibonacci retracement in 4-hour chart, that's the last high and the last low. As you can see, the 261.8, we have like 30 pips. So the price is at the 161.8 and it has a very small resistance here. As you can see, it's forming the higher wick is getting longer and longer. It shows that there's a resistance down there. If the price can break up this level, it can go to 261, and if breaks that, which we have a resistance here, you see these resistances, a little fluctuation here and top there. So this is a zone. Let me draw 2 lines here to show you. Oh, my mouse doesn't move. Yeah, alright, it's okay now. So you can see this is a small zone resistance, and 261.8 is exactly in the middle of that. So we have a kind of we will have a kind of fluctuation of price up here. But if it breaks up these levels, it's gonna go to, there's no other resistances up to close to this 423, which is the high of this channel. So we expect that the price in every level of these Fibonacci's is gonna stop, have a little fluctuation, and if the price is strong, the buyers have more power, it's gonna go higher. So in the third level, this was almost the third level of analysis, adding some Fibonacci's and expecting some like target zones, to predicting some target zones. So we have 3 target zones at the moment, one at the bottom of this, one at the top of this, and the other one is 423.6 Fibonacci level. In the next level, we're gonna have some indicators to get a better entry. I put all of them together at a template, but you can add, this is a stochastic, this is MACD, and there are some moving averages, 3, 8, 21, and 50 and 200. So you can do that easily. You can download my template as well. I put that link in the description below. So at the moment, in the daily chart, as you can see, we have a cross in moving average, in stochastic. We're gonna have a kind of a cross upward in MACD as well. This is a zero lag MACD actually. The movement of zero lag MACD is a little bit different than the movement of the normal MACD indicator. So if it breaks higher than the zero line, we expect that the market's gonna move higher. The stochastic parameters that I use is 1435. So it prevents all the fluctuations of the market. So when it starts to move higher from the bottom, the market moves. And this one is in the middle almost, but because the trend of the market is going higher, it shows that the market has a more tendency to go higher than going low. Okay. And there's one more thing. You see these two moving averages? It's 21 and 8. And the 8 is going higher, and the price broke this moving average. And it shows, just like here, that I think for the next 5 to 10 days, the price is gonna go higher and higher and higher. The MACD today is getting close to zero line, but probably just like here, tomorrow is gonna be at zero if this move continues. Okay, at zero or higher than the zero. That shows that the market again is gonna move higher. So probably here we can get a signal. In 4 hours, as you can see, we have a strong move up. Maybe you could get this move just there because the MACD was getting close to zero, and you had a cross in a stochastic. You could get a move here, but still not too late. If the market comes back to this 200 moving average, 50 moving average, and this 200 moving average, you can get another signal upward. But yeah, at the moment in daily chart, probably this is the best time to get into the market. Let me open a position. It's a very small position. I'm just gonna follow this currency. Okay, I put the stop down here. It's about 60 pips, and as I expected, let's draw the Fibonacci in 4 hours. I'm gonna put the target in 261, and I put the stop loss there. It's less than 1 to 1. It's not a good move. I never do this, but I'm just gonna follow this. This is the smallest. It's a 1 micro lot. So I'm gonna follow this currency pair. So I put a small trade so I can have it in my radar. Okay. Probably even in 4 hours, it's better to put it down here under these two. But that's too close. It's 40 pips. If I put it down under this two, it's gonna be 28 pips. So I'm keeping this, and come back tomorrow to take a look. Yeah, that's how I analyze a price chart. And you can do this 4-step analysis as well. It's very simple, very easy, and yeah, you can get a very good signal with these trends and these kind of Fibonacci levels. I hope you enjoyed, and if you really like my video, please subscribe to my channel. So I upload more than one probably video every day, and you will get these on-time signals, and you can get into the trade with me. So just subscribe to my channel and click on that bell button. So as soon as I upload a video, you will get notified, and you can come and check. And if you like the video, you can get into the signals. Thanks for watching, and have a nice time.